There you go. Okay, so can you
Okay.
explain the market?
Yeah. So I was just saying that the reason why I'm pointing this out now, the fact that I believe that we're about to get a pullback in, when I say the market, the equities market, the US 30, the Dow, the S&P, and what's the other one? The NASDAQ.
Mm-hmm.
Because if you understand, can you Google something for me real fast? Uh,
Sure.
Google economic cycle. If you understand what we do as traders, we speculate based on the economic cycles, right? We speculate. Speculate means trade. I don't want to insult anybody's intelligence, but we place trades, uh, yeah, seasonalities based on the economic cycle. Okay. So when we look, if you can pull up that business cycle right there, Kim, like you can click on that.
Right
Okay,
here.
that's fine. All right. So if we understand where we are in the cycle, then we should always have go-to trades. Now I know I've mentioned this a few times in the past, and maybe everybody has not been on the call or whatnot. But scroll down so we can see, so we can or scroll up so we can see these cycles. Okay,
The
so
four stages. You want to go to the four stages?
yeah,
Or no?
yeah, yeah, that's fine. Go to the four stages, because you're going to see that the only one that we don't want to see is a depression, right? You go from expansion, right? Everybody knows what an expansion is.
Mm-hmm.
Uh, Whenever you have an expansion in your economic cycle, right? The economy is, you see where it says rapid growth. Money is cheap, so companies can borrow money, their businesses grow, their stocks start pushing up, right? Because the businesses are growing, and you get a heat up of business, and that heat up causes what? It causes inflation, right? A hot economy drives up inflation because everybody has money and everybody wants to buy the newest stuff. We want to buy new TVs, new cars, new homes. We want everything new clothes. So everything, the price of everything is going to go up. This is the expansion cycle. Then at some point, your economy is going to hit the peak cycle, right? That's the maximum growth. Now the Fed is a side eye in the economy, like, hey, bro, I gotta bring these interest rates down. I know we're humming, but interest rates are too high. So if the interest rates get too high, it hurts the poor people. And we all know that there's a lot more poor people in this country and every other country, but this country than anything else. So you can't just run roughshod over the poor people or you'll lose the country. So the Fed needs to raise interest rates to cool the economy off, to bring it back down to earth. You know what I'm saying? We can't just run on a hot economy because the inflation would run rapid. Okay, scroll up a little bit. So when after you get to the peak, you're going to get a contraction, right? And this contraction is is what we are anticipating.
That's a
Or
pullback. That's our pullback.
yeah, that's what we're getting right now. Once the interest rates peak out in contraction, right? So you can't buy stocks. You can't buy the stock market during either the peak or the expansion. You would have already had to be in there already, and your
Mhm.
money is rising because once the Fed starts talking about raising interest rates, then everybody's going to sell their equities and they're going to start buying the dollar because the dollar is going to go up when the interest rates get raised. And you can look at that 10-year chart. It's going to be the 10Y. You can look at that chart and it's either going to be pushing up or it's going to be pushing down. So once you're in a contraction, which is what we're doing now, in theory, the Fed is going to be uh, talking about cutting rates, right? The economy is going to be slowing down. You might see layoffs. You might see, you know, companies going out of business. Companies having to sell off. Companies getting, companies failing, businesses failing because they can't afford to pay the higher interest. They can't afford to borrow money because the cost of paying it back is a lot higher. You always hear my brother sometimes say, "Oh, if you can borrow, if I can borrow $100,000, and if I only have to pay back 100,000 over the next 5 years, then it's worth it for me to borrow it because I might make $30,000 on that 100,000. But if you're telling me I gotta pay, 5% interest on that 100K, now I might not buy it because I might not borrow it because it might, if I do something wrong, it might end up costing me extra money to pay this 100K back. So that's how you have to start viewing it. And you start viewing it the same way you view things when it comes to putting stuff on your credit card. Maybe during the contraction and the interest rates are higher, you might not be able to afford to go splurge and run up your credit card because it costs too much, to pay that balance off. And oh, by the way, everything else is expensive. You might not go buy a new house. You might stay in the house that you bought when the interest rates were nothing. Because if you go buy a new house, now your payment on that house is 3 times as much as the one on your old house. So now you can't really afford to buy things that you want to go buy. So as the economy contracts, it'll be a cooling effect. People will stop spending money. People will stop buying new items, and it'll show up in your numbers. Your PCE, your PMI, your CMI, your CPI, all those numbers will start dropping. Once they start dropping, the Fed is going to say, "Oh man, I want it to be a contraction, but I don't want it to go into a depression." We call a contraction a recession, right? I want the recession, but I don't want to go past the recession into a depression. So my tools to fight that contraction, to bring it back, to put some heat back to the economy, I got to start cutting interest rates. And when you start talking about cutting interest rates, you get a whole bunch of people, rich people, who will jump into the market. They will start buying. When I say the market, they're going to start buying equities, and this is exactly what happened in October. Now, prior to this cycle, I didn't know that everybody's going to start buying in October. If I had known that, I'd have jumped in there with them, because this is cyclical, people. And I did not understand the nature or how cyclical it really was, because this is my first cycle. So, and everybody who started trading in 2020, we came into the market after March, right? Y'all agree with that?
Yeah.
But I want y'all to think back. As a matter of fact, can you flip back to the chart, Kim? And can we go look at March 2020? Just go to the monthly chart for me. Oh, that is a monthly. That is okay. So
March 2020.
where's March 2020? It's the
that's 2021. My bad. Sorry. Hold on.
It's the red candles right there.
Right here.
Okay. So prior to where is Monday or that's March. So you got February, December. So if you notice, go back to October that year.
2019 or 2020?
2019, October 2019, right there. If you see how the market pushed up in October, it got bullish. The only difference is, and I know history is going to go back and show you, somebody knew that Wuhan virus had got released, and they started shorting the market in a month early, like in February. So if you notice, in December, it gave you the morning star, and then all of a sudden we fell off a trough.
In December.
We got that's that red candle, I believe.
This one, you're talking about this right here. Evening star.
The evening star, yeah. So you got the signal a month early, and then the market crashed in March. But after the crash, it came back. So you got 2 months of failure, like 2 months. What is that? February and March, you got the 2 red candles.
January, February, and then March.
Okay, so I believe that we're going to have 2 red months too, probably just March and April. This is going to be a red month, I believe. And then April will probably be a red month. The candles won't probably will not be as big. These are huge candles because somebody knew. The insiders knew. You know what I'm saying? Like they knew. If you go back and you look at the yield curve, it's going to invert before you get this nasty drop. And they knew. The same way we knew, if you go back up, go up to the second big nasty dip. I want to say it was the end of 2022 or 2021. It was the end of 2021. We all knew. I remember being on a Zoom call saying in December, the last Zoom call in December of 2021, saying, hey man, they're going to raise interest rates and we're going to sell this market. Now, what I did not understand was how long I could hold my freaking trade. I could have held my trade for 6 months, right? Like, how many months is that? Where it reaches the bottom?
1, 2, 3, 4, 5, 6, 7, 8, 9 months.
9 months. So think about this. 9 months. What month did we get up off the ground? What month did we start driving up?
Oh, October.
Do y'all see the theme here? What month did we start driving up this time? This year?
Oh.
November.
October.
End of October, November. This is a cycle, man. Like, if you understand what you're looking for, and I know this is our first time kind of looking at this information we have a huge pool of information. And the reason why it's difficult for us is because we've never been shown this stuff. And nobody has ever sat us down and kind of explained financial cycles and what it looks like on the chart, right? We do understand, we probably all heard of recession. We've heard of the Fed raising and lowering rates, but we've never really been able to correlate it to real life situations and real life circumstances. There's a reason why we're pushing down.
So right? Do you think price is going to go up here, sweep your high, and then start dropping?
Well, I don't believe that it has to sweep the high because the market is going higher. Right? Like we haven't even raised interest rates.
No, I'm saying sweep it before pulling back probably to the zone.
Yeah, I don't think it's going to sweep it before it pushes it down. I think that it did sweep, just like I think that the NASDAQ did a sweep too on the daily. Like if you go and you look on the daily, you'll see the sweeps and you'll see the market push down. I remember one day last week I said, man, we got a daily chalk on the US 30. You see that? You see it? That daily chalk? So you see where
I don't consider this.
I know, but just bear with me. You see that big green candle that went up and made the new high, right? Then the next candle went higher to sweep that high, but it closed below the wick. No, the previous candle.
Yep.
That's the high. Then the next green candle goes up and sweeps that high and closes below that wick. Go over to the next candle for me. That candle. No, the green candle. Yeah.
The green candle right here.
That one right there. That one right there, Kel. Okay. So if you trade and you recognize liquidity sweeps the way that I do, maybe you would know to sell right there, because the thing that makes this a liquidity sweep is you make a new high, right? You would pull back and now you went up past that high and see how the candle closed above the high, you're fine. That next daily candle that wicked the wick, there's no reason to wick a wick in trading. When you wick a wick in trading, you are now showing your hand, right? The market wicked that wick and immediately it sold off, right? It went down and broke a low. It gave a chalk and then it pulled back up to give you an entry. See the top wick of that green candle on the other side of that M? There's your entry. Now you sold it down, right? And you would have targeted the bottom of that green candle, which is cool. But now it pulls back to give you another entry. And notice on this red candle that pushes down with displacement, that red candle has no upper wick, right, Kim? Now what happened?
A tiny bit. It came in.
So, but the same thing that you're the one that you're famous for this. You're saying every time you like, it's going to come back and wick that because it didn't have an upper wick. The upper wick is little.
I learned that from the wall.
I'm just saying, you want it to be true. So if you fib from the top of that green candle that gave you the entry on that second hump down low, that pullback is probably real close to 78. Yeah.
78.
You can't get you can't get any better, but you have to
Okay.
understand.
Oh, but go ahead.
To me, you have to understand where we're at in the cycle, right? So you have, in order to be able to anticipate these moves, you have to kind of marry it up with what's going on in the cycle. We know that we ran up for 5 straight months. How many months can we expect to just get green candles?
So
Right?
this is why, for instance, right here, I'm just looking right here, right?
Uh-huh.
Because per what's your boy name? ICT.
Uh-huh.
ICT. Okay, so this came and swept this high, right?
Uh-huh.
And closed below.
It went
So,
lower.
huh?
It went lower, right? I
Uh-huh.
agree.
Closed below, but did not sell. So, and that's why
But
I
I get it. But you're okay. I understand what you're saying, but go back to the day, Kim. Go back to the day.
I'm on the daily.
No, no, but I'm saying go back to the day that you're talking about that it
Oh,
closed.
right here.
This is why I'm very heavy on time and price, right?
Mm-hmm.
So you have an end of January pullback, and then the
Mm-hmm.
market keeps pushing right up,
Mm-hmm.
right? Again, where are we in this financial cycle? If you're in a bull run, don't expect the market to come pick you up until March. It's been that way for on the bull run cycles. That's how it works.
Mm-hmm.
It's no different than, hey, how come these people understand that, hey man, when there's a Bitcoin halving, the market is going to run up? When is the Bitcoin halving? Does anybody know when the Bitcoin halving is?
In April, yes. I think it was April.
Yeah, it is. Isn't that crazy? That why does all this happen at the same time? It's you have the same correlation here as you do when you say, hey man, why is it that when the Fed said we're raising rates, why did the market fall for 9 freaking months?
So you say in October,
You got your push in October. You get your pullback in March.
wait a minute, October through December, I think it was,
I would say
or
October through March.
through
October,
March.
you're going to get a push. You're going to pull back in March. March, April should be drops. And then in May, we should
So
look
it should
for,
be bullish. Let me put,
yes, bullish.
and then in March
In
through
April, you get a pullback.
March and April. Okay.
So
Correction.
if we go back, yeah, Terry, go back and look. It's all about the cycles. And here's the crazy thing. The Fed accidentally put us on these cycles. It was a total accident. It was the financial markets were never supposed to be like this. It was never supposed to be easy like this telegraph. But when we lost all of our value back in 2009, we created this cycle. And I'm not going to pretend that I understand everything about this. There's a dude out there that my brother is always listening to. He's an English dude. Uh, man, I wish what's that dude's name? Um, I'm gonna post his name in the chat. Uh, but he breaks it down and he telegraphs. He tells you why the Fed can't change it. He tells you, you know, Raul Paul. That's that dude. That's that dude. LP Raul Paul. That Raoul. Y'all go look at this dude's videos. Man, this dude will tell you exactly when to buy. Like he's the one that told my brother the bottom was in. And I'm like, man, that dude don't know what he's talking about.
To buy who?
The bottom of the
Oh,
market.
oh,
And he tells you why it's on a cycle. Why? Like we all have to pay interest, or we like as a country, we have to pay our debts or we default, right?
mm-hmm.
Like you're going to pay. We can't afford to pay the interest. So we have to either refinance our debt or print money. Either one of those, we can't refinance our debt with these high interest rates. So the only thing we can do is print money. What's going to happen when you print money? The value of the dollar is going to go down. The value of Bitcoin, gold, and the equities are going to go up. So either way, you're damned if you do and damned if you don't. So the cycle that the Fed is on is they're going to have to raise, or they're going to have to lower interest rates in order to refinance their debt with a low interest rate. And then they're going to have to print money on cyclically to bail out these companies, because these companies they're underwater. They're insolvable. Like the banks are not, they're not they're not liquid, man. Maybe the big four are, but if you have a problem in this country, like if the American public ever picks up on the fact that their money is really not safe in banks, they'll stop using them. If you think about it, why would you really use a bank right now? Why wouldn't you just use your trading account and put your money, your savings in crypto? It's liquid enough you can get it right out. Nobody's giving you a return like crypto is. It's just some questions that I don't want to get on a tangent, but it's just some questions that we should start asking, and some things that we have to start noticing about a cyclical market, the cyclical nature of the market. Hey, man, I remember what happened this last time we ran up. It's a reason why. Remember, I told y'all I had a strategy to make $1 million in 3 months. That's why it works. So if you think about this, had I known, if I had known back in October what I understand now, I would be a millionaire, because I would have just enacted that same strategy and it would work again. Now, this is something I wrote on paper when I knew nothing about markets back in 2020. I wrote it down on paper. It's buy NASDAQ. I would put $300 in the market. I would buy NASDAQ at a 0.01. Let's go back to October again.
October.
If you go back to October 1st, or end of October, whenever we started pushing up, just stay on the daily chart. Just scroll. Okay, November, right there, right? November. So you see that bullish candle in November, that bullish daily order block? Mm-hmm. Let's just say I bought after that bullish order block. Or maybe you say, okay, you cherry picking, Todd. So let's say I didn't buy on that bullish order block, but we broke that high and we pulled back. See how we pull back and you get your second bullish order block?
Mm-hmm.
So I could have bought
here
at that order block. Had I bought right there, and every 200 pips or every 200 points, I doubled my lot size and went up, I would be a millionaire right now. Maybe I took a hit at the end of, where's your blue line? January. That end of January is the only time that I may have taken a hit, right there.
Why is that?
Well, is that one day? How many pips is that one day candle right there? How many points?
But you really wouldn't have been taking a hit.
Well, you're right. I know that, but I'm just saying, as far as on that day, it fell 490 points.
Mm-hmm.
So I would have been in drawdown 490 points. But look at the run up. How many points did it run up before I would have met that drawdown? So I guess right around where you have Raw Paul. So if I got in, not down there above that next order block, Go back down that order block right there. That's where I would have got in. So how many points did it run up? Okay, so that's wait, go back down to the below the raw paw right there. So you figure that's 3,000 points. Jeez, man. I would
30,000 points.
well, I'm just talking about the two. So 3,000 as far as from 34,000 to 37,000. 34 1, 85, basically 34 1, 84 to 37. That's 3,000 points. That it's 30,000 pips, but 3,000 points. So every 200 points from there to there, I would have doubled my lot, right? And doubled my position size. So I would have, I think 3,000 is the $1 million marker. I wish I had that paper, man. So I probably would have hit $1 million in that span. I would have to go back and do the calculations. But my point is, even if you're, I mean, you don't have to be that super aggressive, but the point is that those runs work. Now you're going to get a pullback, right? Let's just say the market corrects because we ran up from 34, we ran up 4,000 points. No, we've ran up from 32 to 38, 6,000 points. So what is a 15% correction? 15% of 6,000 is what?
It is 360.
No, it has to be higher than that. 3,060. No.
Wait a minute. Wait a minute. How many? Wait a minute. 6% of what now? 3,000, you say?
No, not 6%. 15%
Oh, 15%. My bad.
of 6,000.
Oh, I'm all wrong.
That's 900.
So we need a 900-point sell-off. Now, when you throw the fib on this move, where does that 900-point sell-off take us?
When we throw the fib down here,
Yep.
all the way up here.
The 50% mark is 36,000. So you can see the 900-point move doesn't even dent that run up. So where does a 900-point move take us? Measure 900 points from the top. That's about 1,000. You're about 100 too deep.
Somewhere up in here.
Yeah.
Oh,
So
right here.
so basically we've got a small correction.
Which is the right here is oh no, not right there. Wait a minute, hold on. Push up. Yeah, right here would be considered the change of character for me.
I get you. So and right now you should anticipate that that's going to happen based on price action. We pulled back 78%. And now we're just pushing down. So we're going to get that violation, and when we get that change of character, I would anticipate looking for price to at least go to your black line. That big black, like around 36. I believe we're going to get the correction.
Oh, down here.
Yep. And then once we get that correction, you can buy this thing with confidence. You remember how we came in and he said, just buy the dips. You don't remember that? It would happen in Ruby's group. It was this dude. Man, I can't remember this dude's name, but he was all he would do was buy the dip. And I know he got wrecked whenever the interest rates came, when you raised the interest rates. Because I haven't heard from that dude since. But that's when we'll start buying, or you can get in for the buy, and you can kind of hold it. You can have a 0.01, and the market might run to 48,000. So that 1.01 lot size, if you get in at 36, when the market hits 46, you're going to have $10,000 equity. The same way that you would have got in October, and you would run up $6,000 just from holding. You'd have ran up 6K. Does that make sense? So let me pull it back to what we was talking about. I know some people probably have starry eyes right now. Whenever I say buy the market, I'm speaking of the equities market. the US 30, the S&P 500, the NASDAQ. Now, NASDAQ is not the exact same thing as the US 30. The NASDAQ is the technologies company. The US 30 are just very highly performing companies. So if you think about technology, when is it popular to buy technology? You buy technology when the interest rates are low, right? When money is cheap, you throw your money at technology because technology is what's going to drive the future. You invest in technology. Now, if you're into technology, like if you invest early in technology, you just hold that investment because your technology can run, it has the potential to run longer and further than the regular company. Because those technology investments will be the next layer of advancement that we build on. You know, it's kind of like if you think about the Industrial Revolution, at some point, our economy was based on hunting and cotton. And then all of a sudden, somebody invested in some technology. They discovered steel. And the people who were refining steel had the most exponential growth, right? Because they built rails, they built buildings, they built everything out of steel. Just imagine all the stuff that we have that's made out of steel, pots and pans. Like it was just a great product. But the technology was what allowed us to advance. And if you think about now, they're building a new internet. You know, that's what this crypto is all about. Is the new layer of internet. Right now, we're on internet that was built back when I was a kid, back in the 90s, right? So now you have this new internet that's being built. And when we always talk about crypto like it's coins, right? But it's really not. It's not a coin. We call it that. We call it coins and tokens. Really, they're just a series of projects that they're building out the new internet on, right? So when we get this new internet, it won't be as slow as this internet. It'll be more reliable than this internet. We can do transactions from peer to peer on that internet. It's where your virtual reality is created. You figure AI now is involved. You know, AI is going to be a new leg of technological advancements. So if you would have put money in AI companies, it's not every one of them won't survive, but you'll have the bigger companies, the good companies will start buying up the other technology companies. And, you know, people are going to get uber rich off of that leg of the technological advancements. So you're going to have some AI company that will probably lead the new era. And as a matter of fact, isn't NVIDIA their computer chips or something, right? Yeah.
Yes.
So that's
beat it to it, Todd. That stock went from like 100 or maybe even less. So I think it topped out at like $100 a chip.
There you go. That's exactly what I'm talking about. So you get that company that does something parabolic, like, and now you'll have some people trying to find that. You're never going to find that again. Like that's the same thing that happened with the .com boom. You got all these .coms, GoDaddy.com, all these .com companies, and now all of a sudden they're nowhere to be found. You got, you just have a few big companies, Yahoo, but everybody is not going to be a Yahoo. But what's going to happen is Yahoo consumed a lot of those other companies that provided value. It's kind of like what is it? Snapchat, right? Remember when Snapchat was just a small nothing company, and then they got bought, and that dude made $1 billion overnight. He was a billionaire overnight because people saw the value in that little platform or whatever. And now Snapchat is, what it is today. So to bring this all together, guys, I know that we always talk trash. I talk trash to Kim about, hey, you got to anticipate. And she's like, no, I'm trading what I see on the chart. All of this stuff, you can marry it together, right? I'm not telling y'all to go in and take shorts on the US 30. What I'm telling you is to pay attention to where we are in the cycle, right? And it might not marry up to the date. Like Kim, if you look at that video, there's a date. There is a date on that video or on that picture, Kim, I believe it's like March the 15th. I'm not saying, and what Kramer was saying in that, he said, I'm not saying this has to go to the date, but he said, I want you to understand that this is very powerful because we are going to get a pullback, right? And the major players in the market, just like I'm explaining it to you, the major players in the market are expecting the pullback too. So they're either going to start taking profits, right? Or they're going to start shorting because they understand the opportunity that exists. If all of us look at those short candles on the monthly charts, when the market falls, it don't take 3 or 4 weeks. You know what I'm saying? That market, it falls fast.
So you say March 15.
Yeah, on that picture.
Mm-hmm.
Yeah. So what he was trying to say is, hey guys, don't wait until March 15th. Like, if you need to take some profits, please take some profits, because just like I'm showing you this information, everybody had, like, the big players understand this information. Like, I don't have to go on TV and show them this information. They already know it. It's their job. They're in the game, right? They already know that the market pulls back in March and April of bull runs. That's how it works. So if it's common knowledge to the people who move the market, then it should be something that we're looking for. We shouldn't be blindly taking longs, right, a day or two before they short, because even when ICT said, hey, smart money, they will push the market up to short it so you can take their long, right? You're buying and they're selling. And today I told my brother before he went to work, he's like, I'm gonna buy the NASDAQ. I said, man, NASDAQ gonna sell. And just because I saw the double tops when that news came out, the news was positive for the dollar. The NASDAQ had double tops and it started buying up. I'm like, man, that's a trick right there. They're gonna run the highs and they're gonna drop the market. And that's exactly what happened. So my point is, because you have these cycles, right? And because now we understand the quarters and the cycles. Right now, we are coming up on this contraction. This is what the Fed has been communicating to us for over a year. Hey, it's going to be painful. Whenever you hear them talk about a soft landing, they're intentionally creating this contraction. They raise the interest rate so high, so fast, they're trying to create a recession, right? And now the numbers are just starting to change. Like, every number is not positive for the US. Now we're starting to see these economies start to say, hey man, I'm in a recession. Like we saw Britain say it. You're gonna see the EU, they're gonna start saying it. The US is starting to say, hey man, we need to stop raising these rates. Well, they've already started saying that. They've been crying, oh, we gotta stop raising rates. So the inflation is coming down. Yeah, that's intentional. That's the contraction or correction or whatever, right? That you slow the growth, you start getting people fired, the prices start coming down because people stop buying all that stuff. And now, once that starts to happen, you kind of let stuff settle before you start lowering rates. And when you lower interest rates, you encourage businesses to borrow money. And when business can borrow money cheaply, they invest that money into their company and into some of that technology that NVIDIA just broke us off with. And now when they get their companies right sized, when they have the new technology and the company is able to grow, right? They're not gonna, like all the McDonald's, they're gonna have a bunch of 16-year-olds. Some of them are gonna have 2 or 3 robots. And now the company is more sleek, right? They borrowed some money, but now they're gonna be able to make a lot more money because they don't have to have those shifts. Those robots never get tired. They work 24/7. And they'll do it efficiently. They don't hook their homeboy up with free Whoppers or free what do you call them? The McChickens. Like everybody got to pay. Everybody got to pay. There ain't no homeboy hookup and homegirl hookup.
Them robots is gonna start getting tired. They're gonna start saying, "We're tired."
There you go.
No, we're
That's
going.
that booty. So,
Hey,
so
Todd.
after that, I'm sorry, go ahead.
Todd, I have a question. I have a question. So, I ran across a video on YouTube the other day that was talking about how the market moves in fractals, which is basically like quarters.
Yeah, well,
Is this similar to that, or does it have any relation to that?
so let's talk fractals, right? Fractals is a little bit different. It's because fractals just means if I see it on this time frame, I can see it in this time frame. It's the whole reason that me and Kim have these little these arguments back and forth, right?
Sparring
Because
matches.
what I'm saying to her is, hey, can we go to a 2-month chart real fast? And let's look at the US dollar on the 2-month chart. What I say to Kim is, hey, Kim, the dollar is going to sell. UJ is going to sell. It's going to sell next week. And Kim says, Negro, I don't see it's buying. There's nothing on this chart that says sell it right now, right? But what I'm saying is, based on this 2-month chart, Kim would ever pull the chart back up.
Oh, you want me to pull the chart back up? Sorry.
Based on the 2-month chart, I can tell you with pinpoint accuracy that we should start seeing that the first week of this new month. Now, it doesn't mean that we're actually seeing it on the chart yet, right? But if you go to that 2-month and you look at the US dollar, or the Dixie, or you just go to UJ. UJ is fine. So if you look at UJ, we had a bearish order block in December. Now, if anybody remembers the meeting that we had at the end of December, we all talked about buying any of the JPYs. So if anybody was on them calls, you remember I was like, oh, buy the JPYs, and we can hold it until we get up to our 50%. Because we know this bearish order block, you got to buy up into it before price starts selling off. So I did not expect for this thing to buy for 2 months. I never said that I expected that to happen. At that point, you have to use market structure when you're down there. You got to use Kim's swing lows. You got to buy it until it shows you it's going to sell. But the key to this particular chart is this 2-month candle had a end date to it. And the end date was the 1st of this month, the 1st of March. And because this candle did not break the high of the December candle, and it's a bearish order block in December, it was a dead giveaway that we're going to sell. So that's why I was so hell-bent on selling. So anybody who looks at this 2-month chart will say, well, Todd, it could just be a pullback of that green candle. Yeah, that's cool. So why don't you fib that green candle, and that will be your target, when you start selling this. Now, me personally, because of the dollar index and because of me understanding where we are in the market, right? Remember the market, it includes the dollar, it includes equities. I don't expect the dollar to get stronger while the Fed is talking about lowering interest rates. Think about this. The Fed is not talking about raising interest rates. We all know and we all understand that the Fed is no longer raising interest rates. Currency gets stronger when you raise the interest rates, not when you lower the interest rates, not when you stop raising the interest rates. So if you couple that together with this chart, the chart went bearish in December. That pushed down in December, in my opinion, and maybe it'll be Kim's opinion soon, that was the change of character. On this time frame, that 2-month red candle that pushed down was the change of character for me. Now, was it a change of character on this 2-month chart? No. But if you go to a weekly,
I don't see it on the weekly yet. I don't see it on the weekly yet, buddy.
So you don't call that pullback? You see it right there on that. So go to the pullback in July.
It's gonna be my change of character down here.
No. In July. Go.
In July.
Okay. I see what you're talking about. I see what you're talking about. So listen, on this particular chart, if you look at where we are, go all the way over to the left, all the way over to the left, all the way over to the left, all the way over to the left.
Oh, you're talking about right here.
Yeah, that was a swing low. Now, if we're being technical, the market pushed it up and it pulls all the way down. Where did it pull down to break that swing limit? That was your change of character for you, right? Now the market went back up. It did not break the high, and now it started pushing down. So really, you should have been bearish at that point, I think, because it did. That's a change of character for you.
I should have been bearish from at this point.
Yeah, yeah. Once it pushed back up and didn't break the high, you should have started
Oh,
being
once
bearish.
it first pushed up here and then break the high.
Yeah.
Okay. Okay, hold on. Let me clear my chart. Let me clear my chart so I can see it clearly. So I can see it clearly. Okay. Let's see it clear. Let me use a line instead. What's so funny?
Good.
Okay.
Hey, they didn't break the high.
Okay. So let me go to, let's see, daily. Because what I'm looking for, I'm gonna explain to everybody exactly what I'm looking for, what I would be looking for, right? On the 4-hour, which I never saw until, okay, so then this pushed up here. So right here, and this is on the 4-hour, right?
There's your change of character.
That would have been a change of character there. Because price broke this high. Now, had price not broken this high, this would not have been my low. This, if price had not broken this high, and when I say break, I mean close candle.
I agree. So if you look at the daily, it probably wasn't a change of character at that date on your daily.
Correct.
So daily,
It was a, wait a minute, hold on. Let me zoom. Oh, this had no wick.
Right. So so go find your swing low on your daily.
It's right here.
That's the daily swing low still? I thought it would be.
I would have, if I'm looking at it on the daily, this would have been my swing low right here.
So the 4-hour change of character was not the daily change of character. You didn't get the daily change of character until the next 4-hour candle.
Yeah.
And that's what we mean by the market is fractal.
Yeah.
So it told you that the market is pushing down. Now, sometime after that, you're going to get a weekly change of character. So you're going to see the same thing on the weekly chart that you saw on the daily chart. Right?
Well,
and maybe you haven't seen it yet. Maybe we haven't seen it yet. Or is that
but this would have been the violated order block. So
well, I'm talking about a break of a swing low. Is that your swing low? Because you didn't get a candle close above it.
No, right. This would have been the candle close based on weekly.
Where's the swing low for your weekly?
The swing low for my weekly would have been this, the push up, the pull back. Then this would have been a push up.
Hey, so your swing low is down a little bit on your weekly, right? Mark your swing low on your. Mark your swing low for your weekly. So that's the weekly chalk that said we're selling. And then, so y'all see, we can go on and on and on, and you get the monthly, and then you'll get the 2-month or whatever. So, but my point here is, when we say it's fractal, on the 4-hour, you got a chalk. Then on the daily, you got a chalk. Then on the weekly, you got a chalk. That's what they mean by fractal. And you're going to get this on every level, as price starts to break down further and further. And then we'll just be in a bearish market. And we'll be bearish until it turns and goes the other way.
So price was pushing down here and then broke. This would have been the swing, but this was a internal swing that got broken. Todd would have said this was the sweep of the low, and he would have got in somewhere down here.
Yeah, or I probably would have got it on that pullback. But even if you waited
This
to
right
that
here.
W, yeah, even if you waited to that pullback right there and it pushed higher, if it pushed higher and broke the top of that W, you can see the imbalance that it created in the next candle. The next candle pushed right back down into there. The neckline, the neckline is what I'm talking about.
Right here. Oh, right here.
Yep. As soon as we broke that high, you broke it with momentum, a momentum candle, and that next candle had that wick that went right down to that imbalance.
Mm-hmm. Well, one candle, two candle.
Does everybody understand the cycle, the economic cycle, and how?
So wait a minute, before we tie up the economic cycle, hold on. What were we looking at? US 30? Because I wanted to make sure I wanted to make sure since this is recorded, that this is documented.
That you disagree with the sell. I get it.
No. Oh shoot. No, I wanted to finish. So in May through October or August, September, what goes on?
We're gonna
start pushing back up.
Yeah, we're gonna go bullish. Now, the year that I started trading, we got a pullback in September. I think if we have a pullback in March, we probably won't get a pullback. I mean, if we get a pullback in March and April, then we should look for a pullback right around
continuation.
Well, to me, May through September is a continuation, right?
No, I'm trying to make sure we understand it. March through April, we're getting a pullback.
Okay, yeah. May through September,
we're getting a continuation. Okay.
Continuation. And we'll probably get another pullback at the end of September, going into the new fiscal year, October.
Mm-hmm.
Now, this remains to be seen, but I can tell you with 100% fact that the market pulled back in September of 2020 because remember I told you I got wrecked. I was up 11K, and the market corrected. But what I did not know then, and what I think every YouTube guru does a horrible job at, is explaining how cyclical things are.
Did you learn a new word?
But
cyclical.
Well, I mean, that's the only word that I can really explain how it works. Like, I think it's very important that people understand that this is going to happen over and over. Like, they can't hide this. If you go and I'm going to find that Raul Paul video where Raul Paul is so cocky and so confident that it's almost scary. You know what I'm saying? You know how the Fed can talk and the Fed can bully me and you. Like with tough talk, you know what I'm saying?
Mm-hmm.
But with people like Raul Paul, people who understand how money is actually working, they don't get scared by the Fed. They be like, dude, you can't do nothing. You know, you can do like you wasted your last bullet. As a matter of fact, I'm going to drop this video in this chat because this video, and I know half of y'all ain't gonna watch it anyway because it's a very long video. But for those of y'all who want to hear it from the horse's mouth,
They say the big words.
Who's the horse, Michael?
no,
ICT.
No, I'm not talking about ICT. I'm talking about Raul Paul.
I might listen to Raul.
I mean, it's a very long video. This is a very long video.
Oh Lord.
Well, listen, if y'all want game, like this dude gives it. He gives you the game. This is the real
rage. It's like look backwards, last 500 years,
and he'll break it down for layman's term, and you'll understand exactly why he's saying what he's saying, and he explains in detail why they can't change it. They can't change it. They like, if you learn this, this is what you're going to have as long as we have this financial system. You know what I'm saying?
So you're saying the rich know this, and that's why they keep.
Yeah. Yes. Well, listen, as a trader, when you say, hey man, I learned to trade the US 30, sometimes people really feel that they have to get in there and they gotta put a trade in, and they gotta hurry up and get out the market, because their understanding of it is not very vast, right? But if you understand the same way that I understood when I looked at that 2-month candle, that the market is now changing direction. If you understand that from a fundamental standpoint, you can take a trade on any of these currencies, or you can take a trade on the US 30 the same exact way. Hey, man, there's a bullish order block. Price has sold down 78%. I'm free to enter this trade. Now, you don't want to over leverage. You just want to get in the trade and allow the trade to start pushing up. If any of us would have gotten into the US 30 in October on a mini, if your broker uses the Dow mini, any of us could have taken any size account and ran it the hell up. This thing has went up 6,000 points in 5 months. The same 5 months that most of us in this group have not made a dollar. You know what I'm saying? It's the same time period. And it takes away all the excuses that I get from the Selenas of the world, or from, and I use Selena jokingly, but my point is, some people don't want to trade. They don't understand how to trade. If they could just buy it and hold it like they do a 401k, they're fine. And these longer term trades, if you sold UJ, GJ, EJ, any of these things at the beginning of the week, you can hold that trade with a great deal of confidence for a while, guys. Like, it's going to drop for a while. What do you mean by a while? Several months, right? It doesn't have to be no major lot size. It could be a 0.01. And I'm not telling you to do the US 30 the same way, because we're not in a bear market. We're in a bull market. Even though I believe that we're going to get a correction, which means we're going to sell off a couple of thousand points, I still believe after the end of that correction, the market is going to turn and buy. I know it. It's not that I believe, I know it's going to turn and buy. So if you would have bought anytime in November or December, your profits will not be touched. I mean, it's going to pull back. And of course, you would lose a little money in the equity, but it'll never turn red. Like, we might not ever see the US 30 at $32,000 again in our lives. Right? Do y'all understand the significance of that? We may not ever see the US 30 at 32K in our life. When I first started trading in 2020, I want to say the US 30 was about $26,000.
2020.
Yeah. In August of 2020, that's when I first started trading. $26,000. That's about right. There's $26,000. Actually, it's a month before those two red candles. See right there? So what's that? Those two red candles took me out. That's what broke my back. But y'all got to understand, that green candle, I went from $300 to $11,000. I was on my way. Had I understood anything about corrections, I would have understood we was going to correct. I could have got in at the end of that correction and been golden. Because look at all the green months after that correction. God dog, man. Make you want to curse. That's remarkable, man. That is remarkable.
I wish I had known. I joined in August 2022.
Well, I know, but that's what I'm saying. Like this stuff, this information that we're learning, right?
I ain't know nothing till about right around here.
Well,
I can just
but Kim, remember were you in the group when we talked about them raising interest rates that time?
Uh-huh.
And dang, we looked at that market like, God, dog, man, I didn't know it was going to sell for all the months.
No, Baba and I had just got to the group, right?
Uh-huh.
And US 30 was we kept trying to sell. It was in December. I know it was in December.
That's at the top. You're go to the top, go to the left to the top of that little range to the left. That's
over here. Where?
Yeah,
Here?
yeah. That first red, no, the last
Over
green.
here.
Yeah, that's it right there. Because that's when we were anticipating it selling, and then
I think it was
in January. In January, it went higher. It went higher and then started selling immediately. Now, I remember bragging like, "Oh man, I paid $4,000." Man, I could have held that trade all year down there.
It was right here. I'm telling you, I wish Baba was on here. It was in December and we kept trying to sell. When I tell you we lost every dime we ever had, we kept trying to sell
No,
in a bullish market. This is why
listen,
I get so crazy when
but
I
I'm with
see
you,
it
but
happen.
like we knew it was gonna sell in January. But I didn't have the knowledge base to understand what that really meant. Like, hey man, we can sell this and just hold it until, for 6 months, for 8 months. You know what I'm saying? Like we could have really just sold and hold, just look for reentries. But I did not understand the how the market behaved during these cycles. And that's why I'm trying to explain to people and trying to impress upon people, whatever you do, find 3 hours of your life and watch that Raoul Paul video. He breaks it down.
Ooh, okay.
And I got it, man. It's a long time, but that 3 hours is going to be the best time that you've ever spent to understand why things are the way they are and why, you can use this for the rest of your life to generate crazy amounts of money or just monthly money if you want to, right? Like everybody understand it, we can all get to a point, and hopefully we're all aspiring to get to a point to where you can put a little money in the market at the beginning of a cycle, and at the end of that cycle you can have a significant amount of money. It's the very reason that my brother dumped 100K into the crypto market. Now, the first time that he was in the crypto market in 2020 accidentally, he caught a few coins that went up, exponentially, like 1,000 times. He 1,000x his money. So if he just 10x's his money this time, then he's a liquid millionaire. If he 20x's his money, 2 million. You know what I'm saying? So all I'm saying is there's a reason why you can take 100K of your own dollars and throw it into a market confidently and not worry about it.
Let me
because
borrow 100K.
You've been here before, right? It's the very reason that Selena will look at this video a year, 2 years, 5 years from now and kick herself. Like, God dog it, man. Like, I really could have taken out a home equity loan and blew it up, right? Or Kim says that, or whomever else on the call that has assets that they can generate money. And if it all went wrong, you're not going to lose your asset. You might lose that equity line, or you might lose, is it worth 10K? No, it ain't worth 10K. I can do 2. Well, put 2 in there. What if you put $2,000 and you 30x that $2,000? I guarantee you on the next cycle, you're going to use all that money. You know what I'm saying? And that's what happened to my brother. You will never be able to change putting $500 into Dogecoin and collecting or looking at your account and it says 130,000. From 500 to 130,000. My brother will never be the same. He will never not put his money in crypto because it only happens to you once. When I ran my money up and I went from 300 to 11K in that short amount of time, my first trade was August 6th. Less than a month later, I got $11,000 off 3,000. Bruh, I'm like, oh man, like this is way better than my job. So I was hooked at that point. Like, oh, I know you can do this. Now, what I didn't understand is that the rich people have a playbook. You know what I'm saying? That they just cycle their money. Okay, all right, Fed is raising rates. I'm going to sell the US 30. I'm going to buy the dollar. Now, me and you do that. We scramble. We up at 3 a.m. We trying to get a perfect position. They don't do that. They put a little money in. They don't over leverage. They put a little money in and they allow that money to start floating downriver, gaining power. Then on the pullback, they add a little bit more.
But is that just because they just don't know how to read the charts?
Well,
Or they like, I'm not saying that I'm saying that they know what's about to happen, along with not knowing how to read the chart. So that's why they put a little, well, I'm sure their little bit is probably a lot of bit, right?
it is it is a lot compared to us. And some of them do read charts, but they're just not interested in trying to get down to the nth degree like me and you are. Me and you are trying to take $100 and turn it into $1 million.
Yeah.
Well, they're going to take 2 million of their 60 million and they're going to put it on and they're going to turn that. They might get 20x on that $2 million.
Mm-hmm.
And then the next time they're going to take 50 million and they might get 20x on that. You know, like it's a cycle for them. They just cycle their money.
Mm-hmm.
And they don't care about exactly getting the perfect entry. They know that in October, the market is going to rise. If they get in at the 1st of October and they hit a little drawdown, they're not worried about that.
Mm-hmm.
They're going to wait because it's the same way that I approach that oil trade, right? Like, hey, man, I'm going to get in now. If I go in a little drawdown, I'll just hedge it. It's going to go up. And now, now that we're in March, I've been floating profit. When oil hit $80 a barrel, my profit on my oil trade alone in my account is over 10K. So it's not because I'm super smart. It's just because I just started accumulating positions based off those long range charts. Now, if oil gets to $100 a barrel, I mean, I might have 100K equity in my account just because I bought oil and I accumulated longs. The same way that we should be doing now with the dollar shorts, with these UJ shorts or EJ or GJ, whatever your favorite pair is. You see the same thing that I see. The question is, do you believe? Right? Like, and many of you don't believe, and that's fine with me. But you're going to go through this cycle, and the cycle will show you whether or not it works. Like you might be a non-believer. And then the person next to you or somebody in the group will say, man, those 3 months, I made $30,000. You're like, well, God, dog. You know what I'm saying? Like, shit, next time I'm going to be the person that makes the 30K. And then the person who made the 30K, they have money to put towards the next cycle. And hopefully, as a community, we just start kind of catching the cycles, right? And now maybe, Kim, me and you might not be worried about some 15-minute entry.
Mm-hmm.
And we might be like, hey, man, it's March. So it's time to sell. I'll wait for that first weekly red candle. Then I'm jumping in the equities market for sales. And you get the first weekly bearish candle. You jump in on Monday and you sell. It's going to pull back first. It's going to buy first because we know the power of 3. But because you have the amount of money you have, you're not worried about a perfect entry. You're worried about what it's going to be 2 months from now.
Oh, I'm worried about the perfect entry. Okay.
Well, I know right now we all are. But there will come a point in time where that's not going to matter. It's a reason why I sweat these these charts and these videos. And man, I've made a whole lot of money from trading. And when I say a whole lot of money, you know, I was making 150K a year with my railroad job, and they would tax the mess out of me.
Mm-hmm. Ooh.
I made over 400K last year trading, doing something that we are just learning to do. Like, it was a dream at first, like, oh man, you know, I can be a millionaire like fast. And then, you know, of course, once you get over that piece and you understand, hey man, you can be a millionaire, but it's not going to happen fast. The only thing that happens in trading fast is accidents. Once you learn the system and create a system that you fit a system around what you're doing, then it's just a matter of time. Wash, rinse, repeat. Wash, rinse, repeat. It's just a matter of time before you start checking off your financial goals. And I don't have to risk a whole lot of money. Now, I could shorten that time frame if I risk a whole lot of money. And there was probably some missteps, and not even probably. There's a bunch of missteps that I've taken on my trading journey. But what I've found that works the best for me is if I understand the direction of the market. If I understand that, hey man, for the next 2 months, you got these JPYs going south, bruh, who can't make money in that market? Knowing that, being the technical people that we are, we can all figure out how to make money. If I know that, hey man, today the NASDAQ is going to wick those highs and start selling, man, who can't make money in that environment? So all we're doing is we're adding this stuff together, and we're using this information to work the market the same way that those clowns do. They've been doing it for years. And they got nerve to get on video and tell each other that this is how it works and this is what you can expect. They would have never did this back in the day. Nobody would have ever wrote this information in any book. Huh, Kim? They kept it to their damn self. This would have been excuse me, it's been a white people barbecue type thing. They're not telling you how to go generate millions of dollars. This conversation with Rob Paul would have never happened.
Mm-hmm.
I mean, that dude just sat down and exposed everything.
Definitely gonna watch it tomorrow at work.
Yeah, you know, y'all will see. But this is why
I'm
I
gonna
just
watch it. I'm gonna listen to it. I'm gonna watch it.
yeah, and it's probably a type of thing that you want to listen to more than once, you know, and maybe not all together. You know, you might listen to it this month, and then maybe 2 months later you listen to it again. This is going to be something that you're going to glean stuff from over and over. Like he goes, like, damn, I didn't realize he said this.
Mm-hmm.
But when that dude started talking, I couldn't believe it. Man, I was like, God, dog, man, like this is just a system, you know, that happens over and over again. And I think that's the first time I had an appreciation that, man, like you just add to your toolkit because you're going to see this again. Like Kim, you were part of the group. Remember when the JPYs? I think last December we had a 2-month bearish order block on the JPYs or on UJ. You remember that?
Wait a minute. On UJ? Or
Yeah,
did
yeah. Pull UJ up. Let's look at UJ. I want to say we had a bearish order block on UJ.
back in December
Last year. I think
um
right there. Go to that bearish order block right there. The first time the market dipped.
right here.
Yep. That's November, December, right?
That's November.
The next candle is December. That's a 2-month bearish. If you put the 2-month candle on November and December is a bearish order block.
Mm-hmm.
And then on the 15th, it started buying up. January 15th, it started buying up.
Mm-hmm.
And I remember not being a part of that. That's why I was like, man, this January, I'm buying this thing.
Wait a minute, hold on. Just 2 months.
Yeah, I mean, it's right there. Go back.
No. I was trying to see. Oh, okay. No. I was trying to see something. Cause I want to see.
Yeah, January. That's gonna be January 15th.
Oh, it looked the exact same.
Oh, right here.
What day is that? 127.21.
One. It's
January.
around the 5th, around the
Good.
16th, it
Good.
started. Huh?
Good.
Huh?
Some stuff never leave you. When you get burned or you get scarred, you don't forget.
I know. Look, I'm scarred for the whole December
Well,
buying
hey,
up
you never
on
forget.
US 30, and I kept trying to sell.
This is why I said, man, I'm buying in the J, and I still screwed it up. Kim. But what I told myself was that's fine. Like don't expect to be perfect. Just put it in your mental Rolodex.
So
And
on
I
the
remember,
16th, it swept. Okay.
yeah,
Okay.
and
I'm
that thing
looking
rolled
at
out.
it.
Look, that thing rolled the hell out. And if we had just understood how being on the right side of a trend works, anybody, Ray Charles could have found a way to make money over the next 6 months. You know what I'm saying? Like that thing went up for the next 6 months.
And
And that's why I'm trying to say, man, y'all don't realize how great we have it, because I believe we're coming down for the next 6 months. I can't say that definitively yet because it hasn't bared itself out. But I do believe that we're going to be pushing way, way down. So can you imagine if you're selling UJ down to 127, how much money you can really make? Bruh, this is going to be crazy.
especially since UJ always buys.
Well, it bought because the dollar was strong. It was buying.
And
But
then it didn't, like we said, just talking, the chart and structure. Price bought up. I mean, sold down, sorry. And then started breaking structure, buying up. And now it's starting to, it didn't break this high and starting to break structure, internal structure.
and
So
to me, the fundamentals line up, with the reason why the dollar is breaking down. So,
definitely once it breaks this,
yeah, I'm looking
the
for next
buy up,
Yeah.
and then the sell down, because that would be the second leg, y'all.
Hold on, hold that. UJ, this is my favorite pair right here. I got to get me in on
You
this.
think it's gonna break before it pulls back, or you think it's gonna pull back first?
I would like to see the break first, because even if it pulled back, right?
I think it's gonna pull back first and then break. I mean, to me, it doesn't matter, but
no, I think it's going to do both. I think it can do both. I think it's going to pull back, one, because we're in a daily order block right here, right?
Right.
So I do believe it's going to pull back probably till it's in balance, or probably
how many pips is that? How many pips is that to the imbalance?
From here to here is 100 pips.
I was just about to say about 100 something. I already looked at.
Exactly.
If it pulls back to price action, but I think it'll pull back to price action once it breaks.
Me too.
Pull back to price action and then fall and then drop.
So follow me on this. This is why I always say on Monday and Tuesday, I expect to pull back about 100. Normally, I look for 100 pip move in the opposite direction, and then I look for it to sell or to go my direction. Now, once we break this swing low, it might take a whole week for it to pull back up there, right? Because maybe, let's say we break the swing low next week and it pushes down a little bit more. So maybe now you got about 400 pips before you go back up to price action, which would be a weekly move. So you might have a 2-week bearish order block, because we got a weekly bearish order block this week. And after next week, you might have a 2-week bearish order block, which needs to buy up first.
A tight order block is what you said.
Yeah, it's still, it for me, that's an order block. But if you look at the 2-week candle, because the 2-week is not closed yet. Just hit 2W, girl. There you go, 2W. How much time is left on that 2W? Yours says closed. Is that closed?
It's done.
It's the 2-week.
So so I guess that is a 2. So maybe it's a 3-week that I was thinking about.
Okay, now what I want you to explain to the people also, It's got 13 days left. 3-week has 13 days left. 13 days, 22 hours. Almost 14 days.
So almost 2 weeks left.
Mhm.
So you can't look at we can't look at a 3-week candle. We can't, you can't trade off the 3-week candle because they're not finished. You can't trade a candle that's not finished.
Okay.
Anything. So if it's not finished, you just go to go back to the 2-week.
Okay, and I want you to explain this to the people because I asked you this some time ago.
Uh-huh.
Determining when to look at the 2-week, when to look at the 3-week.
So okay, only when they close. You can't use the information until the candle closes. So in this particular case, the candle closed.
The 2.
And yeah, glad I re-looked at this because I thought it was next week. But this candle's closed. What I believe is going to happen, and just because I believe this doesn't mean jack, y'all. I believe
start buying back up.
Well, I believe it's going to sell first for next week. And then I believe the next week, the last week of that 2-week candle, or it's going to buy back up. So I believe that you're going to see a wick come out the bottom, and then you're going to have a green candle that bought back up in the price action.
That matches with the Fibonacci for the to hit the 27 extension, the negative 27.
Yeah, so that's what I believe we're going to have for a 2-week candle. And then we'll start fresh with another bearish candle that's going to push down further.
So you're saying because, oops, sorry. Okay, so you're saying a little pullback.
Next week, 100 pip pullback, and then we're going to push further down to the area to break your swing level.
Mm-hmm.
And then after that, I believe we're going to trade
to the
back.
negative 27, and then pull back to.
Yeah. Yep. Make sure you post that chart in the JPYs because I may need to use it as a cheat. But that's what I believe that we'll see. And listen, just because I believe that doesn't mean it's going to work out to a T. But we're still bearish. This is a weekly bearish order block, so I will look for it to buy up first before it pushes down.
Let me put this over here. Oops. Okay. Okay. I'm putting this in.
That damn Terry had me rolling, bro.
Terry is crazy.
Hey, Terry, I'm already in one of my accounts. I'm in the EJ buy. I'm in the EJ buy.
Damn, tired already.
Hold on. No,
yeah,
y'all.
Because, hey, if you know it, Friday gonna give you that wick. Just like this UJ got a wick on it. You know that wick is gonna happen on Friday.
I swear I was thinking the same thing. That's why I was on it.
Don't be like me.
Because I say it's gonna have to fulfill God's plans the first week. I said, so it got to sell down something. They're gonna buy up Sunday night. I was on the same thing, but I said I'm gonna leave it alone and I'm gonna wait till Sunday night.
Yeah, EJ, when I looked at it earlier, because I got into it early, right around the time the US 30 and all that was I mean, not the US 30, the NASDAQ was buying. And I had a pretty good profit on it, and then it pulled back. It gave me a chalk move.
We're going FTI for Todd's information. Okay, so let me just say this because Terry gonna make me.
Terry be doing too much. Huh?
I'm just saying.
Doing the most.
Look at just what Todd said. That's why I said that. EJ sold down the rest. So next week, like you said, I think that's God's plan. We're gonna expect it to buy up on that weekly candle. That's close enough for me for a good order block. Buy up half of that and look for that sale on that change of cap.
So we're on the 2-week. We're on the 2-week, right?
Uh-huh.
And
I was looking at EJ on the 1 week.
I still think price is coming up here to 192.50.
Uh-huh.
and then start selling. That's
Now, you know what? I agree with that because that's a quarter level.
It hasn't swept. That's the thing, because it needs to do a sweep because it got them equal highs.
well, you're saying based on your strategy or ICT, this is already swept.
Well, I do. It is already swept, but because it didn't give you a 2-week order block, it's possible that what you're saying is true. With the other one,
so you're saying that part of the strategy that you do, if it sweeps and then gives an order block, that's when you look for price
so
to
listen,
go in the direction of the order block.
You have an order block on the 1-week chart, right?
1 week on the weekly.
No, you don't have an order block.
No.
No.
Yeah. So this is a little different. What is it, GJ?
Mm-hmm.
Look at EJ though.
So in my opinion, I wouldn't trade GJ. Like, it doesn't. You know how I say pick and choose the one that fits your.
Mm-hmm.
So this is not. There's a reason why I picked. Like the other day, I said, "Hey, sell EJ."
Let's look at EJ.
There's a reason why I picked that one, because it gave me the setup.
EJ?
Yeah, EJ. EJ gave me the setup that I wanted.
That's beautiful right there.
So we're saying on the
Go to the 2-week and see what it looks like on the 2-week, because I haven't looked at any of these pair on the
2-week.
That's a bearish order block. It's a wrap for EJ.
Let me see. Hold on. Let me see. And I'm just looking. I'm back testing. Hold on a
I
second.
might have to switch my sights on EJ and leave GJ alone for a little while.
Yeah, EJ.
So this swept and then gave a bearish order block. Okay. And then sold for, let's see. And then sold for about 400 pips. Okay. Okay. I can get with 400 pips.
Well, I think in this case, you even have a higher time frame confluent. What does UJ look like? I'd be interested to see that, what that chart look like too. Did it give you a bearish 2-week? UJ sold a crap ton of pips.
Yeah.
Oh, it's bearish like a mofo. So there's no way I would trade GJ when there's a UJ chart that looks like that and an EJ chart that looks like that. You know what I'm saying? And UJ in particular has a bearish 2-month order block. Bruh. That's all I need. Like,
as soon as UJ tap in to the golden zone or give us the change of character when it's close to that golden zone, I am in here.
You say when it gets to the golden zone?
I'm in there. She's talking about of the weekly or the 2-week order
The
block?
weekly or the 1 or the 2 week.
Talking about the 2-week, Kim.
2 week.
That thing look juicy.
It is juicy.
Like what? And look at that.
So
No
juicy.
wiggle.
Wait a minute. You say when it gets to the
The golden zone, the pullback of that.
of the 2 week. Of the week. Okay, I gotcha.
Because look, there's no wick, absolutely none on that green candle.
Oh, wait a minute. Which green candle you talking about? Right here?
It's just like looking at us dead in our face.
That candle got to give up the goods, Kim. That's the candle that you want to see too. That candle got to give it up.
So we can run up
how many pips is it to that?
$1,000.
How many pips to where?
To the zone, girl.
Oh.
To the 61, to the 50. I like the 61. That's the 50.
So that's the 50. That's 169 to the order block itself.
So this is probably going to drop first. You know, it's going to pull back a little bit and then drop, and then I still say next week you're gonna probably get the green candle to go up. The first week is going to is going to push down. So it'll probably be 100 pip pullback, and then however many pips down there to break your swing low.
Mm-hmm.
It might even dip into that no wick candle.
You talking about right here?
Yeah,
Oh,
that's
you
long.
talking about right here?
Yeah, that's a negative 27. Negative 27.
This week, though, right here. Okay.
Yeah. So I say we pull back 100 pips, then we go get that swing low. And that'll be the end of this week, probably. And then next week, you might dip down and then push all the way back up into that golden zone. And that'll be the end of that 2-week candle. They come away down there.
400 pips.
Yeah, but I think we got to push up first. So the first week, we'll probably dip down and start pushing up. And the second week, we'll push all the way up to the zone. And then that next stretch of down pushes will go get those new lows. That's what I think. Again, this is just me thinking out loud, not trying to tell y'all to do it a certain way. But
We'll see. We'll see it happening too. And whoever sees
now for
it.
me, I got to see it on a smaller time frame. I see what you're saying, but I got to see it on a smaller time frame first.
Which is fine. But I just kind of bring this stuff up because once you get the general direction from the higher time frame, then you can kind of load up. Like we don't necessarily have to trade any buys like I do or like you've been doing, Terry. You could just wait. If you're a person who doesn't believe in that, just wait. But you can load it up when it sells. You're going to sell with confidence. Be like, hey man, like I know that we got a bearish 2-month order block, and it's probably going to push down to those lows.
So we're in a demand zone, right?
Yep.
We've broken these lows, these internal lows in a current demand zone for a higher time frame swing.
So maybe it pushes all the way up to the highs first before it sells. Huh?
I was just about to say, because see that wick to me on a smaller time frame, that's a rejection and possibly a change of character on a smaller time frame.
Yeah, and,
so
and
wait
a minute, which wick? This wick?
Yeah.
Yep.
Oh.
Yeah.
Oh, you mean for the buy? Change of character for the buy is what
Yeah. Now I was
gonna say, Terry, I had to make a decision whether I was gonna buy EJ or UJ. And like I don't like to be in several different buys. You know what I'm saying? I just want to be in one. And at the time, EJ was looking a little better for my buy. But I can see either way is fine, man. Like my point is
I see what you're saying. EJ is better, but I was just so hard fixed on GJ. I was just watching it like a hawk. So I didn't even look at the other.
Yeah. So my point is look, there's plenty of reason for y'all to start looking at these pair for the long-term sales if you believe in the reasoning or the strategy. Bruh.
So this is my thing though, but so this is my thing because this is the higher time frame swing, right? This is the higher time frame swing. So if price is not breaking these lows, then my guess is that price is going to keep buying up. So
no, but Kim, it could buy back up to the 2-week order block and then go down and break that low.
2-week order block. Hold on, let me go back to the 2-week.
And look at all that inbound.
So technically, price could buy up into the 2-week order block, and then go down and break the low. I don't know which. This is the part that I'm bad at, right? Like, I don't know if it's going to buy up first or if it's going, or the market's going to open and it's going to take off selling. Sometimes I think it's going to do one of those and it does the opposite. So I don't know that it's going to just take off and start buying up. I think it should buy up at least 100 pips and then maybe turn and go down and take out your low and then come back up and buy it. But it could just buy all the way up to the order block.
But has it started breaking market? Well,
you saw
let me go
to
your 5. Let me go to your 5 minute because
you saw it. You saw it. It did do a change of character already.
No. Because this would have been the swing, right?
Well, Kim,
So
before
You
that,
can't count the wick. That's a wick, huh?
well, but before that wick, you had a high. You had a high that got taken
Yep.
out. So
wait a minute, before this wick,
yeah, you had that there was a high before that got taken
you
out.
talking about right
Now,
here?
yeah, it took out the high and it took out the low.
No, but this is the
Listen, this is a news candle. That was a news candle, right?
I'm sure it
Yeah.
probably was at Friday at 8:30.
Yeah, that's
Yep, that was that. That
that's
was
your
that report.
NFP. That's your NFP candle.
Yeah.
So you can mark the high or the low. You can mark the high and the low if you want of that news candle.
But
And
this still hasn't been even if you're saying this is the high, it still hasn't been taken out yet. Well, you saying it's been taken out because of this wick.
what I'm telling you is, yeah, the wick took out the high and it took out the low. Which one did it take out last?
So this was the high, it pushed up, pushed here, and now we have the low.
Then it swept the lows.
Then it swept these lows.
That tells you everything you need to know. That trade is going to turn around and go up.
Not swept the lows, but I say close. There's a break of structure here, right?
Okay, you call it a break of structure. I call that a liquidity sweep. That's
Okay.
cool. To me, it swept the lows, and price is going to turn around and go up. Now, my problem is I don't know how high is it going up to the 2-week order block, or is it just pulling back before it takes out the swing low, the one that you like to see taken out.
Mm-hmm.
It could pull all the way up into the order block and take out the swing low next week.
Mm-hmm.
Excuse me. Now, for me, on that 5 minute, I wouldn't have got in that until it goes back up.
I didn't get
that
into
other area.
Yeah, I didn't get in it. I told you I TJ, but I'm just playing devil's advocate, right? Like nobody ever has to take any of these trades on a lower time frame. But if you're doing it, you're going to do it based on some principle. So
that's what I wanted to ask Terry today. Terry,
ma'am,
on GJ for your buy. For your buy.
Go on, DJ. I show it to you.
What was the purpose? What was your purpose for
Talk to me.
in the GJ buy? Let me go to the 4 hour. Hold on. What was the purpose for? And why I'm asking is because
you see that? Go down all the way to the bottom of that last little structure.
Right here.
Right there. On a smaller time frame, I saw a change of character, and I said that's like 80 to 100 pips. I'm in that. I'm gonna need to get that.
Okay. Now, my question to you is because we're at a key level, right? We're at a key level. And then we have a very strong trend line resistance, right? Like strong. It's strong. So that's why I was asking, like,
to be quite honest with you, I saw that imbalance, saw the change of character on a smaller time frame. It got to buy up somewhere. So one of those imbalances. That's how I looked at it.
So you was just buying on the lower time frame for a short term.
I was buying on the lower time frame for a short term. I know the sell was there. And like I said, since me and Ty got such a good entry way up top at 190.6 or 7, it's not gonna hurt me if I'm wrong. Because I got so much equity from the original sell position way up there.
Candy say he's trying to make his dollar dance, girl.
Well, I'm trying to get. I need to get all that. I need some money. I got bills to pay.
He said,
Kim.
Yes.
The gentleman name is Terry. Is that correct?
Yeah.
Yes, ma'am.
So, hi, Terry. Okay, so I feel what you were saying because I found myself in that same situation this week because I'm just learning about market structure to the point where I'm starting to understand it. But I found myself seeing where it was breaking structure on like a smaller time frame. And I was thinking the same thing. Okay, it's ready to buy. but it in actuality it was selling. Not on this
Okay,
pair
what
in
time frame was
particular.
you on?
That was on US 30 today.
Now, see, now look, I'm gonna be honest with you. You're gonna have to talk with Kim and Todd about them indices because I don't trust them like that with these regular pairs. But
Yeah,
it
yeah,
should
I
be the
know, but I'm
same.
saying
I
it
would
was
say,
it's same concept, you know, as far as what you just described. So Kim, if maybe you can explain that, because I think I'm getting confused with like understanding the difference between internal structure
Mm-hmm.
versus like the overall structure. Does that make
Okay.
sense?
Yeah.
Okay.
So this right here for me is a swing, right? It's a 4-hour swing. And on the 4-hour, there is this internal swings here. Okay. Now, when I go up to the daily, like you don't see all those swings, right? But you still see this higher time frame, or this was the 4-hour swing, and now it's the daily swing. It's a higher time frame swing, but on the daily, I mean on the 4-hour, you see all these internals. Does that make sense? You see it on the smaller, although 4 hours is not a smaller time frame, it's smaller than the daily.
Yep, I saw that. Mm-hmm.
So on the daily, you just have this, and you have this 1, 2, 3, 4, 5 days of bullish. You had a bullish, and then it pulled back 2 days of bearish, and then it started consolidating a little bit, and then it started going back bullish.
Mm-hmm.
So if you're looking at it on a higher time frame, it's a more cleaner swing. You can see it cleaner,
Okay.
right? But when you start going on the smaller time frame, you see these internal, and here's my little thing. Okay. So you have, this was going bearish,
Mm-hmm.
and then you had this break right here
Yeah.
on the
Mm-hmm.
4-hour, right? So
Mhm.
you had this break, you had this little pullback, and then price pulled back to that order block, to this, where this broke.
Yep.
Right? It broke here, or if you want to look at it as retesting the break, and I'm just going to show, if you want to look at it as retesting this initial break, this internal break, right? So price could have easily just bought up to these highs and then started selling back down, right? But because price did not break, when price started pulling back and price did not break this low, which was this swing here, when price did not break this low, our guess is that price is going to now, and started breaking the highs. Our guess is price is going to continue break at least up to these highs. So from this break up to this high is 123 pips. But if we used our fib, price pulled back to our 88. So you can almost count on it going to your negative 27.
Mm-hmm.
Because this is our last swing
So
before price
basically,
started pulling back.
you typically would do the swing, marking up the swings on like a higher time frame, like a 4 hour or
You can, but I mean, I can always see it at whatever time frame. I see it on the 1 hour. I see it on the 30-minute. Like I can see that this is still the swing.
right.
Now, but these I know are internal, but there was this move here, price started pulling back, and then price did not break structure till here. So all of that is my push to the top.
Okay.
And then once price started pulling back, you can mark it up. Let me just say this, mark it up on, because it's probably easier for you to do or see on the higher time frame. But yes, mark it up on your higher time frame. You can then go down to your smaller time frame or 30-minute, because once price got to your 78.88, so once it got to 78, it hadn't broken any structure. I would not have considered this breaking structure. Okay. So once it got to the 78, it hasn't broken any structure. However, had it broke structure at the 78, once it reached the 78 and started breaking structure, I would have then been looking for the pullback for the continuation. Okay. Price then tapped into the 88. There's imbalance in the 88. I would have been looking for price to tap into what I consider the institutional candle, which is the last down candle before this up move of the swing that we fibbed up, right? I would have been looking for price to at least tap into the last down candle before the up move. Or you'll hear me say the institutional candle, and which is where it went and then started buying up. So from the institutional candle to the -27 was 268 pips. 268 pips.
Okay, I have a question.
Hold on, Terry. From the institutional candle to it didn't go to the 618, but it went up to 329 pips and then started breaking structure around here. It pulled back and then started selling down. Okay, go ahead, Terry.
No, I was just gonna mess with you. I'm saying, if you see all that, how you can see why I got in that buy?
Oh my gosh, because that made no.
I just want to see. You
No,
expect to
this
went
was
wrong.
this was the move. This was the move here, right? So now, let's see. Let's see, Terry. Let's see. So now, well then, Terry, you did it, because it went straight.
That's all I'm saying.
Hold on.
And see, I'm seeing the same thing, because I actually was marking my US 30 chart up correctly, and it played out very similar to this.
What are y'all talking about? I'm sorry, I missed. You're talking about when it switched to bearish?
So no. He's saying, why didn't I see where he wanted to get in for the buy here? Because once this move played out, right? Now you have this last swing. You have this swing. We had this swing here that we marked up. It played out on the fib, right? So now we're saying this was the move up. And
to me, it broke structure, internal structure.
No. And he's saying it pulled back to the 88. It tapped into the institutional candle, which was the last down candle before the up move, and started buying that. So he's trying to say,
I disagree 1,000%.
Wait, what?
No, I'm just telling you why. I'm gonna tell you why. And I know, I remember the day I put chalk on the US 30. I put it in the chat, and a few people disagree, and which is fine. But to me, whoever disagreed ignored a crucial fact. You can't ignore that that's Wyckoff that happened before we broke structure going down on the 1 hour.
No.
Internal structure.
I get what you're saying. I get that.
Well,
No,
well,
he
let
was
me-
asking me
but
why didn't.
I know, but let me finish my explanation.
Oh, okay, go ahead.
I'm going to get to that.
Mhm.
If we go back up to the top of this structure, let me just get my little pen right here. If we go up to the top of this structure,
Oh Lord, not the pen.
Uh,
Oh Lord.
we see that this is Wyckoff.
Mhm.
Everything above that line was
Mhm.
Wyckoff.
Yep.
Then price breaks that internal structure where my low is,
Mhm.
creating a chalk. It goes down, right? If you noticed on this chalk, here's what I think a lot of people who don't trade smart money, they kind of ignore this break right here. So you got this break, price came down and broke that internal low right there.
Mhm.
After it breaks that low, we have to pay attention to what price does after that. It either needs to go up here and break this high, which it didn't.
Wait a minute, which high?
The one I marked this high right here.
I can't.
Y'all see, you see where I drew that all that mess, the swing high.
Oh, okay. I see it now.
Yeah. So you see where it's either going to go up there and break that swing high,
Mm-hmm.
or that's price pulling back to give you an entry for the sell. So once it doesn't break that swing high and it starts pushing down, you need to get in for a sell, and you can at least sell it to that low that it broke. And you can see where price blasts through that, gives you a lower low. I understand how Terry says it taps into that level of your 88, but by that time you've had your change of character already. So in my opinion, wait, hold on.
Can
you have to look at this.
Squiggly lines.
Well, okay, let me erase it. You have to look at this as bearish at this point because where is it? Because of that change of character. And I get it. What you're saying is, oh, no, higher time frames is not clear my drawings. Okay, on a higher time frame, it hasn't broke your swing low yet. But it's because we're not giving it a chance. It's pushing down. It's breaking structure. It's coming down. It's not just one candle. It's going to break all that structure.
I get what you're saying. But what I'm saying is, this is what I'm saying right here. I'm gonna clear this whole thing off.
So if you choose to buy right there where you bought Terry, you have to buy up into that imbalance. And you can't expect it to break the imbalance because the current leg of structure is bearish on the lower time.
Let me just say
Hold on, say that one more time, Ty.
If you take a buy from where you're talking about taking a buy where it tapped into your institutional candle, you can only buy that up into the imbalance that was created on that sell move down.
Exactly. That was exactly what my plan is. Then I was going to get another position for that sell, which I did, and I sold back down. Like I said, that's still like 80 pips. I need that.
Yeah, I mean, you can do that, and there's nothing wrong with that as long as you understand that you're trading those lower levels and you're not trading the higher time frame.
Todd, I can appreciate that explanation because that is truly what I was forgetting. So US 30 looked very similar to this today. It came down, it tapped into the 88%. And then I'm thinking that it's going to continue to buy up, right? So I'm buying up. But again, I was not considering how it did not break those highs. So technically, I believe, and correct me if I'm wrong, but we have a change of character for the sale.
So, listen, I honestly thought that this was US 30. I didn't realize
it looked just like it, right?
Just like US 30. I thought that we was talking about the US 30.
Yeah, but if you look at the two charts side by side, they almost look very similar.
Exactly. It was. That's. I didn't put change of character on GJ. I put change of character on the US 30 whenever.
Exactly. Yeah.
They started selling.
So I don't consider this a change of character.
I get it.
Because I don't consider this the change of character.
You don't. It is not a change of character on the 4 hour. I got it. I'm with you 100%. But on the lower time frames, it is definitely a change of character. It was a change of character again, up there at your 23% line, where it broke those lows at your 23, like those, that's the change of character. Price pushed down. It came back up right into the imbalance where it broke that.
No, that's true. No, I agree with that. I agree with that.
So that's all that I'm saying
This would have been a change of character.
Yeah, right? and I don't debate it is not on the 4 hour, but I'm a firm believer that in time and price, right? So what I mean by that is if I'm expecting a change, you know, from a buying program to a selling program, or from a selling program to a buying program, then I have to annotate it when I expect it to happen on my chart. And really, you know, kind of in line with that picture that I sent you, Kim, I believe that this is going to be the start of the breakdown. That's what I believe. Now, whether, you know, time will tell if this is truly, but I told Sean the same thing. Like, man, I wouldn't buy any of them indices at this point, because I'm looking for them to shift to a sell function.
He told me that 3 months ago, and
now
I passed out. Went so high.
That dude is full of crap. I told him that the NASDAQ was going to sell today too.
So this is what
silly question, you guys. Do you think that US 30 can buy up just a little bit? I need my $24 back on Monday. Sunday night.
You say $24.
Is it gonna buy up just a little bit?
Hey, I'm not messing with none of that. And, you know, it would have to start breaking structure to the top side. All I see is wicks.
Yeah, for sure.
I'm not buying jack. And especially since Kramer gave up that Larry Williams indicator, I ain't doing it, because
wait a minute, really a Larry? Wait a minute, hold on, let me check this. Is Larry?
And for the young lady, I don't know who it was asking me. I also, as another confirmation, I used that RSI, and it was exhausted on the sale all the way at the bottom. So that's another thing. It's just an added confirmation. It wasn't my only, you know.
Yeah, but RSI is only good for consolidating markets. If you're in a trending market, RSI is not going to help you, because if it's selling for months, like if you look at the RSI for the JPYs, it's probably at 150 for the last 2 months, because it's been rolling.
Yeah, but
to me, on a smaller time frame, it works a little bit better. Like I said, it was just another added confirmation on top of other confirmation.
Yeah, but I'm glad you brought that up, because you know, it just helped to clear up what I thought I saw, right, on US 30, which I was seeing it clearly, but I was missing that one point as far as it wasn't breaking any highs. So therefore, I should not have been considering further buys. You understand what I mean?
Yeah.
So yeah, I appreciate that, you bringing that up.
What is this right here, Kim? This is
Larry Williams indicators.
Lord.
I mean,
you got about 5 of them on there, though, Kim.
5? It's like
you gotta.
I don't know which one he was using. I never even thought to look at it. Look for it on TradingView.
Let me see what it looked like on the chart. Hold on.
I wonder if that stuff really worked. I might start buying if them little arrows pop up on the right time.
Let me see. Hold on. Larry Williams. Larry.
I wonder if those little indicators pop up at, you know,
Larry.
right when the last one would have got your toe up though.
Toe slams. Knocked out the box.
But I mean, all in all, that don't look bad if those arrows pop up at that time,
huh? If they pop up at this time, but I'm not defending.
Yeah, I wouldn't do it either. I'm just saying, you know.
I mean, I guess this was a nice little sell down. Let me see. Let's see. From here down to.
Oh, that's 200 some points. That's pretty good.
Mm-hmm.
But I still want to see a green arrow saying it's buying back up. Don't let me get taken out the box.
Yeah, exactly.
Hey, don't let me get toe up like that, you know.
It's
So
definitely
I
going
guess you gotta
Hey, you gotta get out 100 pips at 100 points at a time, huh?
I'm trying to see. Oh no, this said buy up. What I just don't know when I don't use the indicator, so I don't know when it. Oh wait a minute, it's got a where is it? It's it has a little moving average something another. Hold on.
I'm getting ready to get back on my dumb money program.
Let's see. Style. I thought I saw a little moving average something. There it is right there.
Yeah, turn to another color. There you go.
So I don't know what this mean either. I don't know. I don't know how to read the squiggly
Look
line.
like you should have said something about buy it all the way up to the top somewhere, huh?
Say what?
I mean, sell. I'm sorry. Look like you should have said sell somewhere around there, huh?
That's what you would think. This is
Yeah,
why. This
yeah.
is
Give
why.
me that
Maybe
thumbs
the
up. I'm
indicator
all the way.
ain't 100% accurate, but maybe it just give you a little signal. There's one
Well,
in the middle.
maybe there's a better one. I don't know. Larry Williams.
There's price action.
Yeah. Market structure, price action.
Sorry.
I agree.
I agree.
Price broke out. Key level came back to the key level. Now we just gotta wait to see what price wants to do. I mean, it is creating higher highs and higher lows. So we just got to see what price gonna do. Now it did.
What is
Of
the
course,
weekly? What does the weekly say?
the weekly
We
is.
at the end of the week, so
Oh shoot! Why is it?
yeah, why are you putting a bunch of dots instead?
Because it won't stop. Oh shoot! Okay, there you go. The weekly is saying. The weekly
I see
is
the evening
saying.
star, Kim. I see the evening star.
No,
Whatever.
well, yeah, I don't do that either. But I see that price is in a order block, right?
Yeah, look like it's gonna buy back up to the order block right there and then sell.
She might get
That's
that 24 hours.
what
The
I
Todd
would.
to the Todd order block.
Yes, sir. I need my $24 back. You're right about that.
Ah, but
Demise
it might come down first, and then it
Hey,
might.
Demise, hold what you got. If it come down, hold what you got because you know it's going back up there.
I know
Yeah.
it's going back up. Cause see, look, I'm growing a small account. I'm doing good. So y'all stop laughing.
We
On
ain't
That's
a
what I'm
small
laughing.
talking
We
account.
ain't
about.
laughing.
Because
That's what I'm
to
talking
me,
about.
Demise, there are easier trades for you to take to grow that small account than the US 30.
Wait a minute. Let me get my flow down. I'm getting it. I did good this week now. So I'm following I'm putting it all together.
So
Everybody that
you're
I've been
telling
learning from,
so
putting it all
Demise,
together, and it's coming together nicely.
so Demise, you're telling me you're gonna pass up that nice order block on UJ, and you're gonna pass up that order block
EJ.
on UJ to trade
No,
a
I'm
section
not.
in which
I'm not passing it up. I look back and forth to kind of see what I see, and then I make a decision from there. But again, I'm on a small account, so
I'm with you,
I
but
gotta take what I see and what makes sense to me at the
I
time. But
agree.
I
agree.
wrote down EJ and UJ to go back and study them. I'm
Okay.
gonna be ready.
Okay.
I'm scared to trade US 30 on a small account.
Hey,
Yeah, I ain't gonna lie. I think I agree with Todd. I wouldn't be looking at US 30 if I'm trying to grow a small.
yeah, but hey, Demise, you got to go with what's working for you. If you're comfortable doing that, then by all means, handle your business.
We're putting together, understanding the zones, understanding market structure, and everything that you all have shared today. That's what brings it all together. And technically, once you have those things down, you can trade that same way on any pair or asset class,
On anything, you're right.
on any of them. So whether it's US 30 or not, you just may have to go with a more conservative lot size on US 30, and that's okay.
So I'm going down. timeline, of course, we got these wicks on the 4-hour, but if we go to the 2-hour, price came and filled in this little imbalance here, right? Pretty much tapped into this order block. This was the last swing, the market structure, right? This is the swing. This was the area of supply that had not been mitigated yet. Price tapped into that, pushed down, pushed back up. It gave us a bearish order block on the 2-hour. On the 1-hour, it gave us a bullish order block and then gave us a bearish order block. So yes, I'm inclined to this selling back down.
Go to 15 minutes, please.
Oh Lord. 15.
Then go to the 2-second chart. I want to see that.
Heck no.
There, go right there. Like push up a little bit more and then go down. And feel that imbalance up top now and then go down.
I don't know.
Just a little bit. It ain't got to go all the way and fill it off. Just a little bit.
The way this rejection candle, this rejected, gave a bearish
Hold on.
order
Blow
block.
it up. I can't see all that. Blow it up a little bit, please. I can't
This,
see too good.
you got a bearish
Oh,
order
okay.
block.
No. I might agree with that. I agree with you.
You got a
I need to
bearish
see it.
order block. And then you have a candle close, price pulled back, close. If price goes up here, you're saying close
It's
this
going all the way
imbalance.
up
So
to
this,
the
if price is coming up
that's
here,
105 minutes.
that means it didn't break this low. And then it's going to start breaking structure to the top side, which means it, to me, it's going to start buying. So
I wouldn't mess with that right now. I ain't gonna lie to you. Now, that's one time I'm gonna
wouldn't
agree
either.
with you about trading the miss. I wouldn't
Even
mess
if
with
I'm
that right now. I
trading
need
the
to see stuff.
15-minute, this is my key level right here. This is a 15-minute key level, right? So I would need for price to either break here
or push up and then come back and reset. I agree.
or this was the level here, the violated order block right here, to either come back to here and bounce either between or then start selling.
Now, I ain't gonna lie to you, Kim. I agree with you. I wouldn't even mess with that right now. Me personally.
You still in the
Hey,
trade?
Kim, I think I'm gonna have to take my loss on this one because now that I'm looking at it from how you're showing it, I'm gonna be losing either way because
Are you on a personal account?
yeah, it's just a 10-cent trade.
So I would say don't go to don't get out the trade. I would say put you a hedge.
Okay.
I would say put you a hedge here.
Because my TP was at it was only for 30 pips, but it was at 39,041, which is above your top zone there. So that's why I was saying I might be out of luck.
So I would say put you a hedge at this zone here. Or if you don't want to put it there, you can put it at like below these wicks, because if it breaks below these wicks, then price is likely going down here. So that's at least 120 pips, right?
Okay.
So price is going to start breaking these lows. So if you have your hedge in, then you'll be making profit or building equity in the account going for this, in the sell, building equity going down for the sell, right? And then, because we know price is probably going to push back up. I don't know. It might even push all the way down here. And if I look at the institutional candle here, right? So it may push all the way down here and then may push back up to mitigate. Because now if price closes down here, it has broken this low. So this is your new swing, right?
Yeah,
So
I
if
see it.
that's the new swing, price may push back up and then start selling back down. So once price starts pushing back up, then you'll be back in profit on the one that you're in the buy for.
Okay, real quick, how do I, okay, explain again when you know that the new swing has been created, because you
The
just said it.
new swing has been created once price breaks the low.
Then that
Once you
becomes
get
the last
once
swing.
you get a
Okay.
break, because price, this was the swing, price pushed
Mhm.
down and then started going going bullish.
Mhm.
So once price breaks this low, that makes this the next swing high.
Okay.
It has
Gotcha.
to break this low for this to be the swing high. Just like this broke this low, which
Yeah.
that made this the swing high.
Okay. Okay. Okay.
So yeah, so not until this low is broken, because currently this is just a high, not the swing high. Because price could come back down here and not break this low and then start buying back up, right? But if we are understanding the market, or if Todd is saying, because I don't do fundamentals, if Todd is saying it is March, what did I say? Dang, I don't forgot that quick.
They
What
would say March 15th or something like that.
March 15th, if Kramer is saying March 15th that price is going to start tanking from March and April, then we can expect price to start tanking. I'm probably saying maybe to here somewhere, maybe lower. If I look at the higher time frame, let's see. If I look at the higher time frame, and price is going to start breaking these lows, then I would be expecting price to pull back based off of technicals to retest this initial push right here that has never been mitigated. There's an
What
imbalance
about
here
37,500?
that never been, yes. So we're to 37. Yep.
I see
Boom,
that.
like money.
I see that. Yep. That looks really good. That looks really, really good there.
Or if you're
Mhm.
looking at the order block or the demand zone, this never hasn't been tapped in either. 37, 380.
37,400.
Yeah.
That's the
Whatever that
what's called,
quarter
that's the
is.
overshoot. Yeah, that's the overshoot for 37,500, and that's the discount. For 37,400, that's when you
See,
might look for it to start buying back up.
now you're talking Spanish to me, okay?
I got the quarter
No,
levels
not
down
Spanish.
pat.
I do
I
know a
got them
little
quarter
Spanish.
levels. I got them
But
quarter levels down pat.
if it retests this area here, it can retest it here or come down to this zone. So this is a key level here, and then this is a key level here. So it can come back down to here. And my guess is if it comes down here and start wicking and breaking structure, then now we talking coming back down to
35.
is that 35? Yep.
No, 35 is a little bit lower.
Oh, wait a minute, hold on. I didn't see this. Oh, that's about the same as right here. So I can see that that's a key level right there, right? And then if it breaks that zone, then you can take it from this zone to this zone. So now let's take a look at it. So from this zone to this zone is for about 500 pips. from this zone to this zone is about
Ooh,
700
Lord,
pips.
700. Yeah, that other one's about at least 1,000 up there.
And then from this zone to here is about 1,300 pips. So that's what it's looking
I
like.
still don't think I'm ready for them indices yet. I'm gonna leave. I'm gonna ride with the JPY.
Oh,
JPY
you can do it.
right
Don't
on
be
the end.
scared. You can do it. Don't be scared.
When I get a little bit more money, I might try.
Just follow your rules, just like you would in
Follow
anything
your
else,
rules, Terry.
and you
Follow
can
your
do it.
rules.
I've
Trust
been
me.
following my rules, Kim. I
Terry.
just ain't been following all of them. But I follow the reports.
Terry. Lord have mercy. Lord have mercy. So I am expecting one more drop because I don't my power of 3 is a little different than but I look for 1 drop, 2 drop. I'm looking for a 3rd drop. So I'm looking for another break before price starts really pulling back to wherever it's going to pull back to, whether it's going to keep buying or pull back to keep selling.
Okay, so what you think you saying your third drop would be right there
The
at that key level?
market maker cycle. Huh?
What would your third drop be? Even with the first little area or what?
So the one,
Or
no, 2 drop. I don't know how far it's going to drop. I don't know if it's going to break all these lows. I don't know if it's going to break the key level. And then we don't know. I don't know. I don't know what the market going to do. I don't know if it'll come all the way down here and then start pushing back up. I don't know. But I do know, what I do know is it's going to break this
it's gonna
low
come to at least right there.
at least to this key level here, to this zone. Or might even, well, this is really my key level because this is really my swing. Because price did not break until here. So that means all of this is the swing. So I know it'll break this low. I just don't know if it's going to break this low yet. I will know if price breaks this key level, and because I'm expecting it to go down to the next key level.
I'm good. Like I say, I'm happy. I'm happy with what I did.
Well, I'm glad you're proud of yourself.
I'm switching over to EJ. I might have to switch over to EJ. I don't know.
So this was the key level here. This was the swing, the zone here. Ooh. Oh, that's a. So, so yeah, I'm expecting the next drop to happen. Again, at least to here, which is 38.2 something, maybe 38.250, maybe. I don't know.
Yeah, 250. That's a level. It's a minor level, but it's a level.
All right, y'all trading anything else? Is that it? You sure did. All right, I'm gonna stop the recording.
Thank you.